With CPI just around the corner, the markets are ready to make the next directional move. Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. It is of course CPI day. The CPI data will be coming out later on today. We'll be discussing that in this video. We're talking about how it could potentially impact the markets and of course what the CPI data is. We're focusing more on the short term and a macro analysis today, doing more of a momentum analysis and a trend analysis, talking about the technicals and the structures behind the current price action. As you would know already, Bitcoin has been retesting and finding a decent amount of support on that 21,500 support line, as you can see on the smaller time frame chart over here. On the macro chart, you can actually see that 21,500 is a point of support on the VRPV. According to our visible range volume profile, we can see there's an increase in historical trading orders coming from that 21,500 range pushing downwards, and therefore it is likely and expected, and what we have seen is consolidation as we've approached that 21,500 range. The VRPV does suggest that a move toward the downside would be possible, but would require a lot more volume to push us through, and that range ends around 19,200, which is where that weekly POC level is. Again, we'll talk all about this in today's video. Now, before we get started, smash the like button, hit the comment button, subscribe to the channel if you want daily videos of Bitcoin. We do technical analysis, structural analysis, and price action analysis, focusing on Bitcoin, of course, and the broader markets. You can also join our Telegram channel, guys. Second link down below. Updates, information, videos, news events, everything is posted in here. If you want the CPI data on release, go ahead and subscribe to this channel over here. We're posting the live data in here about 30 to 45 seconds after release, as quick as we can. We also do have a VIP channel, guys. You can join our VIP group chat over here. We have our VIP channel with all of our trading signals, entries, targets, stop losses, everything is set out for you guys. We also do have a group chat with all of our members in there for our VIP channel. Now, if you do want to support the channel further, you can go ahead and sign up to Bitget. This is the exchange I trade on personally. You can get 15% off all of your fees for the rest of your life if you trade on Bitget. You'll get that 15% fee discount plus a whole bunch of extra features we'll talk about later. Let's get into the data, and starting off with the monthly returns. Bitcoin has not moved much in the last 72 hours already. We're down 6%. We've been hanging around this 21,500 level now for about 3 to 4 days, if I'm not mistaken. So we are starting to see a little bit more compression in price action, and we are starting to see now the volatility start to slowly pick up as we approach CPI, as the market's going to start moving in directions as what trying to match that perceived systematic risk. So 24-hour liquidations are up 24%. Again, not massive. We're under 100 million, and volumes under 100 billion, but still up 43% in the last 24 hours. Liquidations are, of course, more in favor. Let's go ahead and refresh this. They've been more in favor of shorts, but again, we've seen shorts and longs being liquidated in the price range around 21,500. That dropped down to around 21,300, of course, liquidated a lot of longs, and then we've had some squeezes, and of course, we've had some fake outs up and down liquidating both sides. So this is what we call a chop zone. Again, a chop zone is when we see, not a lot of definitive direction. We see shorts and longs being liquidated as the price weeks down and then pushes back up and then weeks back down. We've seen a little bit of a chop in the last few days around 21,500. Again, a lot of indecision, but you can still see mainly these longs are being liquidated on these large wicks. Moving on to volatility, 2.19%. It is curving down overall, as we did see the price action take a little bit of a dump, which is completely normal. But we are starting to see volatility within the 24-hour period pick up a little bit as volume and liquidations are up, indicating again that volatility is starting to rise. And like I said already, that is normal leading into CPI, where CPI is an event that draws a whole heap of volatility into the market. Let's talk about the broader market. So the DXY. The DXY has retested that downward descending trend line. And we said already, if we break through this level here, we are going to be very bearish on the market. So we will expect Bitcoin to drop below 21,500 and continue down. We will expect the traditional markets to drop and continue down. However, if the DXY rejects from here and CPI facilitates that rejection and comes out positive and the DXY continues down, we're going to see the markets bounce and rally, and 21,500 will be that local low point for a swing toward the upside. Moving on, S&P 500 and Dow Jones. Dow Jones is pushing upward to retest the upper end of our symmetrical triangle formation. A breakout over here would result in a strong move toward the upside. Again, looking for 36,600 if 35,000 breaks on the daily. And of course, if we get rejected here and CPI comes out really poor, we can expect a directional move toward the downside. If we do break downwards from its uptrending support on the daily candle, we can expect a move towards 33 or 32,000. Moving on to the S&P 500, again, we're creating lower highs over here. Not amazing to see on the daily chart, particularly when we're underneath major resistance. But again, it all is going to be determined upon CPI. If CPI, of course, does come out poor and we lose this uptrending support line over here, we can see the S&P 500 drop potentially down to 4,000. But again, until this uptrend is broken, guys, this uptrend is broken, we are still in an uptrend, and therefore we do have potential to bounce higher. Let's go ahead and talk about Bitcoin. And I think this is a thing we need to discuss on Bitcoin that a lot of people are getting confused about. We have seen a reversal pattern. We saw this reversal structure. We saw a reversal breakout of the falling wedge. We reached our target according to that reversal structure and pattern, and we did get rejected from here. This is where it gets a little bit confusing because you need to understand how time frames work, and more importantly, what technicals show you across different time frames and how to apply significance to different indicators on different time frames. On the smaller time frame, there is absolutely no doubt when you look at an hourly, you look at a 4-hourly, you even look at a 12-hourly, we are in a downtrend. Okay, we are in a downtrend. On this price action here, we are in a downtrend. We're underneath our moving averages, our momentum is negative, we're underneath our overall trend lines, it is very much down. We are in a downtrend, okay? But if we zoom out to a larger time frame, such as a daily, such as a 2-day, and specifically a 3-day upwards, we are technically still in a uptrend, okay? So what does that tell us? If we're in an uptrend on the macro, well, this being a uptrend, not the macro, not in the whole entirety of Bitcoin. For us to be in a complete macro uptrend, we actually need to break above 25K, but this reversal pattern is still technically upwards. If we want to see a break toward the downside, we're going to have to lose 21,500, okay? So what this tells us right now is it tells us this rejection from this point here is more likely as of right now to result in a healthy correction that will lead to a continuation rather than an immediate crash toward the downside, although that is possible if we do trigger a break downwards of this current level, okay? And we'll come back and we'll discuss that in a little bit more detail. So let's really quickly go over the macro, what we're looking like, what levels we need to hold above, what our targets are, and then we'll get to the short term and do all that analysis. So on the macro, like we said, guys, we do see some key levels over here, and the important levels are, of course, these red boxes. These red boxes are, of course, our major resistances on the chart. We have that resistance between 22,600 and 24,300, with 25,000 being a trigger. So breaking above this level here will flip the charts above this local high, turn this whole area into deviation, and we'll be continuing on a macro uptrend up to $28,000 to $30,000. This is a very important yearly retest of the bull market low that we actually need to break above to enter a bull market. Okay, the bull market will get started essentially above 30,000. Now we can confirm this on the 4-year cycle. If we look at the 4-year cycle and we look at the prior yearly lows of previous bull markets, such as this line over here, $347, such as this line over here, $5,900, we can see every time we close a monthly candle back above that level, we actually never close a monthly candle back below it. We end up developing a macro uptrend that initiates and ends up turning into that bull market. It does take some time to ramp up, but it does end up in a bull market. You can see over here, that line corresponds with the $30,000 level on the chart. Therefore, breaking over 25,000 breaking into and over 30,000 will result in a macro uptrend that will develop into a bull market, okay? Very important. Now, toward the downside, guys, a lot of people are saying new lows are possible. And yes, until we create a macro uptrend, new lows are definitely possible. I do not think anyone should be writing off the possibility of new lows to 0% until we break above this 25K level. We are still at risk of seeing that macro reject over here. We'll talk about that in today's video again. We'll talk about the technicals when we get up to it. A macro rejection from the levels. Currently, this is a rejection of the small time frame that has not led to a macro rejection, okay? From this level over here, that would facilitate a continuation downwards, a loss of the 19,200 POC that would fill this gap and allow us to retest and potentially again lose this lower level, which of course is at 16,300 to 15,700 level, which would of course, if we do lose that, send us to new lows. And we'll discuss that in a little bit more detail. So as you can see, guys, the macro is quite broad right now. There's a lot of stuff to look out for. There's really important levels on the chart you need to be looking out for. And of course, with CPI coming out today, everything can change. We can see that crash down below 21,500, which will trigger a continuation downwards. But you'll see a bounce from 21,500, which could potentially confirm that this drop has been a healthy correction and reversal. So that is why we're talking about today, because there's so much that can happen. It's very important you understand not only what's happening on the short term and the price action and momentum and technicals, but you understand the levels on the macro chart. So now you understand that, we can move on to the smaller time frame. Let's go ahead and get into it. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So, the smaller time frame technicals, guys, and we'll come to these again in a little bit and go into more detail, but we're going to talk about these in relation to the larger time frames. If you remember back to the start of the video, I was saying it's very important you understand how to apply significance to larger time frame indicators and smaller time frame indicators, and understand the discrepancies and differences between those two when doing your analysis. Such as an example, if we take a look at the market cipher B right over here, and we go to a 3-day chart. So the 3-day chart over here, we can see on the 3-day chart, we have just printed a red dot. Now, if you know what the market cipher B is, I've been using it a fair bit lately, you would know what this means. This means we have positive momentum, okay? We've reached that overbought, or what we should overbought territory. So that's generally these 2 red lines, okay? We've printed a red dot, which signifies a shift in weakness. So we have overall positive momentum right now because we're still over the 0 point on the histogram. So this is all positive, this is all negative, okay? But now we have a downtrend in the positive momentum, which signifies we have weakness in our positive momentum. So we have weakening momentum, okay? That can often lead to a rejection and reversal, as we have seen. This is technically still positive momentum though, so we are still technically in a uptrend according to our momentum. But if we go down to a smaller time frame, such as a daily chart, you can see that the momentum has officially crossed to the negative. So how do you apply significance to this? What does this tell you? And I guess, how do you look at these two things and say, okay, are we positive though, or are we negative? First and foremost, you have to understand how technical indicators work. They, of course, are lagging, but more importantly, the smaller time frame reflects to the larger time frame. So it goes small time frame first, and then it expands out to the larger time frame. Meaning, if we see continuations of certain indicators on a smaller time frame happen over and over and over, or we see that same trend happen over and over and over, or continuous weakness in the momentum on a smaller time frame, eventually that translates to a larger time frame. Remember, a larger time frame is essentially a more smoothed version than the smaller time frame when it comes to indicators, when it comes to price action as well. Okay, so currently we are taking a little bit more significance right now to the daily, to the 12-hour, to a 4-hour than we are to a 3-day. The reason being is because we saw an incredibly volatile and explosive move towards upside, which is going to make all of our larger time frames indicators look more bullish than they should currently be looking. All right, if we go to like a 7-day chart, it's going to tell you that only now the indicators are going to start looking positive when we've already had a reversal, such as this 7-day chart. We're only starting to see positive momentum now, but that doesn't make any sense because we've just had a massive rejection from a resistance zone. And that is why we need to understand how to apply significance to different time frames so you don't end up buying at resistance or buying after explosive moves when you shouldn't. So let's go back to that 4-hour chart then and see what's happening. So on the 4-hour chart, we can see a clear example of decreasing momentum, okay, decreasing volatility, and compression. Okay, we had an explosive move toward the downside, okay, which would increase volatility, okay, specifically breaking through that trigger zone, which has sent us down to 21,500. We know momentum is dropping. We can see momentum has dropped into the negative, currently retested these lows. We can see momentum is again in a downtrend and dropping on the MACD and the RSI. We do know the price is above a major support level, which is at 21,500. We do know on the macro have entered a VRPV range, which is providing more historical trading volume and therefore more support. So we can deduce from that we are going to see consolidation. And with consolidation after a volatile move down, we generally start to see momentum indicators compress and we start to see strength build in these momentum indicators. But that doesn't necessarily mean that a reversal is incoming just because strength is building on these momentum indicators. What it is doing, it is smoothing out the volatility that we experienced on this move toward the downside. Okay, if you think about like a graph and we had this volatile move down and then it starts to kind of slow out, that is kind of what we're seeing here. We're seeing those momentum indicators smooth out that massive increase in volatility that we had occur during that crash toward the downside. So this data isn't enough to signify a reversal. What it is saying, it is a signifying consolidation. Remember, technical indicators are derivatives of price action. If you look at the price action and understand what's happening, you can actually infer what the technical indicators are doing. So the technical indicators right now are suggesting exactly what is happening on the price action. They're not telling you what is going to happen, they're telling you what is happening. They're telling us that consolidation and compression is occurring above 21,500. Now, our moving average indicators, such as our marker cipher A, however, is suggesting that the trend is down. It is suggesting on a 12-hour chart and then below, we are in a downtrend. We are underneath our 50, we are underneath our smaller time frame movers. Now, it is important to note, this is not an aggressive downtrend yet, as the smaller time frame moving averages are not underneath the 50 EMA and the price action is very close to the 50 EMA, suggesting that we are currently, yes, in a downtrend, but it is the start of a downtrend and it is not a very strong downtrend. Above support, not a strong downtrend, and consolidation. What is that telling us? It's telling us the market is getting ready for the next move, all right? And CPI is going to be the trigger. So then how do you know where the next move is going to go? Now you need to do a structural analysis. Now you need to look at the zones. You need to look at the price action levels. You need to look at your supports. So to understand that, we look at our levels, and our levels are very, very clear. We look at our prior horizontal support levels, which of course is going to be the local high of this zone here, 21,500. We look at our supports, 20,800. Now we know that if we close a candle below on the 4-hour chart, okay, this over here, we can expect a continuation toward the downside, very unlikely to find significant support at 20,800 and more likely continuing downwards. Again, CPI can trigger that. Moving on, guys, to a 12-hour chart again, let's bring up some other indicators to see what is happening. I'd just like to note one more time, guys, we can see that MACD crossing upwards. What this signifies on the MACD, it signifies, again, we do have negative momentum right now. We are in a downtrend on a small time frame, but that downtrend is starting to weaken. We are starting to see a crossover develop. This is weakening bearish momentum. Again, this is an indication of a potential reversal occurring, but we do need to understand we are underneath the uptrending support line, and we do have a technical downtrend right now, meaning we have overall weakness in the trend. So the potential for a reversal to develop over here is a little bit more unlikely than if we were above the trend and still in an uptrend on a smaller time frame. And therefore we do need to be a little bit cautious. But moving forward, guys, even onto a smaller time frame, we can see again more consolidation, more compression. I'd be looking for breaks of these local highs. A break above this level here, 22,000, will be a very good indication. We'll be continuing upwards to retest some of these highs over here again, looking for like 22,500 again for potential retest. And like I said already, breaking below 21,500 on the smaller time frame on a 4 hour, we're looking for a continuation down to 20,800 to 20,500. I hope that summarized it all for you guys. Let's go ahead and jump more into the macro. So even on the macro, guys, we see a lot of different stuff. We see the 50 EMA on the monthly acting as major resistance, which again is a huge negative. We haven't really seen that before. We've seen the price action drop below the 50 EMA on the monthly, but we haven't seen too much resistance on it. We've seen a 2-month period over here back in February 2019 and January 2019 where we saw a bit of resistance on it. And again, this could be an indication of a macro reversal toward the downside again, signifying a shift downwards. But just as I mentioned before, we are underneath the 50 EMA. The smaller time frame movers are above the 50 EMA, signifying a weak, very weak, in fact, macro downtrend, okay? Very weak. Again, this could be reversed like we saw over here. When I'll be concerned, this smaller time frame movers cross below the 50 EMA. That is when we start getting a little bit more concerned that this downtrend could develop even further and take us into another few months of macro downtrend to a new low. Moving on, guys, we do see that the 200 moving average here on the weekly again is acting as a resistance. Like I've said many times, these resistance levels are very important. That's a $25,000 horizontal resistance corresponding with the 200 moving average, and that is a 24,300 horizontal resistance corresponding with the 50 EMA on the monthly chart. Two very important levels we need to break above, not only when it comes to price action, but when it comes to our technical levels here to confirm a macro uptrend. Breaking through these levels equal macro uptrend, not only macro uptrend, equal a strong start to a bull market. Okay, guys, very important. Now, I want to go over one more thing before I end the video, and I hope you're enjoying so far. The death cross, and why I think it's absolutely a waste of time to even consider. The death cross is a waste of time to think about, in my opinion, guys, because at the end of the day, moving averages, they suggest trend, but they're just averages. At the end of the day, if we see a long drawn out bear market, which we have seen the longest bear market in the history of bear markets, okay? We saw a very long bear market occur. We are more likely to see these lagging indicators, okay, cross over bearish. That does not necessarily mean that we're going to see an extension, like a 12-month downtrend happen now, but we had a death cross on a monthly. I think it's important to apply, less significance to these 12-month long indicators than you'll be looking at the smaller time frames. As we discussed at the start of the video, what happens on a smaller time frame eventually develops on that larger time frame. It's only normal now to see death crosses pop up on the larger time frame, as we have seen a 12-month long downtrend, so it is massively lagging. Now, if we see 4 months of uptrend, that death cross is going to disappear, or it's going to reverse toward the upside. It's very important to understand, guys, the macro, the larger time, the 12 month doesn't determine where the price is going to go. The smaller time frame does determine where the price is going to go, and those movements on the smaller time frame determine what happens to the macro, not the other way around. Okay, I'm going to end the video there. If you've got any questions, leave them down below. Hope you enjoyed. Go ahead and sign up to Bitget, sign up to our Telegram channel, and of course, if you're interested in Crypto Academy, learning how to trade, becoming a trader, understanding how to analyze charts, trade, risk analysis, emotions, all that kind of stuff, sign up. Contact us over here, guys. We'll send you all the information, and we'll see you guys in the next one tomorrow. Cheers.